Hello and welcome to my channel. I'm the insurance lady and I run an independent claims adjusting company. I've been in insurance for just under 15 years and I see how coverage decisions get made. And so I wanted to create a platform where I could provide answers to some of the most common insurance and insurance claims questions. Over the years, I've seen dozens of people miss out on tens of thousands of dollars, and it's because they were believing things that just weren't true. And so today I thought it'd be a great idea to debunk some of the biggest insurance myths. So we'll go ahead and just dive right on in. The myth number one is a full coverage policy. There is no such thing as a full coverage policy. All policies have exclusions and limitations. So some exclusion examples would be flood, wear and tear, ground movement. And so what does it mean if someone's trying to sell you a full coverage policy? It probably means they're trying to sell you an open perils or an all risk policy, which means that you're covered for anything that happens unless it's specifically excluded in the policy. And the other type of policies that you might see are named peril policies. And those are policies that provide coverage for anything that's the result of a specifically named peril or cause of loss. An example would be fire or wind and hail or theft. If someone's selling you a full coverage policy, they could also be trying to sell you a named peril policy. And the reason I say that is because whenever I was getting quoted for insurance for my house, I didn't tell them I was in insurance because I didn't want to be that guy. But I had asked for an open perils policy and he quoted me for a named peril policy. And I said, well, no, I want an all risk policy. I want coverage for as much as I possibly can. I don't want it to be named peril because if something comes along and it's not a named peril, it's automatically going to be denied because it wasn't one of those listed named perils. And so the type of coverage I wanted was the open peril or the all risk. And he said, well, this does provide coverage for everything. And I said, well, no, it's a named peril policy. So it only provides coverage for these specific things. And his response was, well, yeah, but it basically covers everything. So what are the odds something else is going to happen? And I understand that logic, but the way that it was presented was that this covers everything. And had I not been in insurance, then I probably wouldn't have known the difference. Probably would have taken him at his word. And his summary of what the policy covers isn't exactly what he was trying to convey. Although he meant well, and he means, okay, it's unlikely anything else will happen. He did say it was full coverage, it covers everything, and that's not true. And so that's something that I wanted to bring to your attention as well. If someone is telling you you've got a full coverage policy, there's no such thing. So take a look and see, do you have a named peril policy or is your policy an open peril policy? And what type of exclusions do you have? Take a look at your deck page and see what's listed there. Myth number two is flood is covered. A lot of people think that flood's covered because they see water damage coverage in their policy. But there's different types of water damage that your house can have. And so I'm going to explain a few of the differences. The first one would be, say your supply line to your dishwasher fails and water is discharged everywhere. That would be an accidental discharge. That's that type of water damage. And then let's say it's raining outside. You've got wind-driven rain, which is when the rain, you guessed it, is driven in the dwelling by wind. And that can be through a storm-created opening or an opening that wasn't created by the storm. Then you also have flood, of course, and that's where whenever you get rains or a dam breaks or something like that, whatever the cause, flood is when the water rises up and enters your dwelling. And so flood is specifically defined. And so some people think, oh, I've got water coverage, that means it's flood. No, flood is defined very specifically, it's separate, and you actually have to have a separate policy for flood, which is why it's not covered under your homeowners, because you have to buy flood insurance through a totally separate policy. If you need flood insurance and you think you have it in your homeowners, talk to your agent about your options of getting that separate flood policy, because you will need to get a separate policy for that. It's regulated by the government. So be sure to touch base with your agent if you think that that's something that you need. Myth number three is mold is covered regardless. And that's definitely not true. You don't have automatic mold coverage. A lot of policies have mold exclusions, and some of those will say mold is excluded no matter what, doesn't matter what the cause is, not covered. And then some policies have limited mold coverage where it'll say, okay, we'll provide some coverage for mold. And usually it's got a sublimit of 5 or 10 grand. But then they'll also say that the mold has to be the result of a peril that's insured against. So for example, if a hurricane comes through and you get flood damage, and then that mold around where your flood damage is, the mold would be the result of flood, and flood's not covered. So the mold wouldn't be covered either, even if you have that limited mold coverage. The next myth is that insurance replaces everything with brand new items. The purpose of insurance is to restore you to pre-loss condition. And so a lot of people think that they'll get the latest and greatest. That would be considered an upgrade. So the best example that I have to kind of explain this concept is actually the Apple MacBooks. So if you got a MacBook laptop in 2018 or 2019, it probably had the iTel chip in it, and you likely paid about $2 grand for it. Well, fast forward to today. Let's say it gets stolen, or you have fire or water that damages your laptop, something that your policy provides coverage for. You would actually be owed the current value. So Apple now is working on the M4 and the M5 chips, and they've already announced that they've basically made the iTel chip obsolete, so they're not going to be supporting it anymore. And so the value of those iTel MacBooks has now dropped to about $200 or $250. And so the policy would actually only owe for the current value, which would be the $200 and $250. Even though you spent $2,000 on it, you wouldn't get the upgraded version because that's not what you had before, and that would be considered an upgrade. So just to remind you, the point of insurance is to protect you against unexpected financial loss. And so because they're protecting you against loss, they restore you to pre-loss condition so you don't suffer that financial loss except for your out-of-pocket policy deductible. And so that's why the policy restores you to pre-loss condition, therefore getting you back with that iTel MacBook, not the M5 MacBook. So just keep that in mind. Myth number 5 is that the insurance companies know everything that you have. So to explain this, like with a fire loss, if you have a total loss on your dwelling and the carrier just writes you a policy limits check for your dwelling, the contents isn't typically going to be handled the same way. So with contents, the policy says, well, if your policy limit is 100 grand or 150 grand, that's saying they'll pay you for up to 100 or 150 grand of your contents. But the burden of proof is on you. So you've got to show what was in there, what you had, what was damaged, and you have to prove ownership. So let's say you have a total loss of the fire. You have to actually list an itemized list of everything you had. And a lot of times they'll ask you for those purchase receipts. So if you have any type of online banking statement or emailed receipt, that sort of thing, you might have to provide that as well to prove ownership. And I will say inventorying your property it's very important. We actually had a fire loss to our house whenever I was little. And I remember my parents for weeks were sitting there trying to write out the list, just trying to remember, oh, what was in this room? What was in this drawer? What was this? Because a lot of times people think, oh, I know what I have. But whenever it comes down to it and you've got to write a list of everything, there's a lot you actually miss out on. And it could be considered, oh yeah, well, it's just little things. But the little things add up, and that can add up to thousands. So try to keep an accurate inventory of what you have. That way, in the event that something did happen, you could easily reference that, because the carrier doesn't know everything that you have. They provide a coverage up to a certain limit, and then it's your responsibility to show everything that was damaged within that limit. Myth number 6 is that you should file all claims because it's a good idea. Filing all claims because it is not a good idea. And I'm not telling you not to file any legitimate claim that you have, but really what I'm trying to explain is that your policy has an out-of-pocket deductible. And so if your out-of-pocket deductible, let's say, is $1,000 and you have some minor damage that's only $100, or something was stolen and it was $200 or $300 worth of items, that's going to be below your policy deductible, which means you're not going to get a claim payment. So you can file that claim, but you'll be getting a letter that says the damages did not exceed your policy deductible, so no payment can be made. And really the point of this is that premiums can be affected by that. So there's a lot that goes into setting what the premium should be. And really premiums are set based on evaluating risk. And so if you have a high claim history is definitely one of the factors that goes into premiums, because if you have a high claim history, then you're a higher risk. And so you're going to obviously have to pay more in your premiums to offset that risk. And so I'm not saying that that weighs the most when it comes to rating, because I don't work in rating, but I will say it is a factor in there. So really the intention of insurance, as I mentioned, is to protect you from unexpected financial loss. And so if you have a small claim that's under deductible, that's not really the purpose of insurance. So if you can get away with not filing that claim because it's below deductible, I mean, you can just easily do that spot repair yourself or replace that one or two items yourself, because you would have to anyways, since it'd be part of your deductible. I would just say go ahead and do that. That way it doesn't affect your claim history and your premium. But if it's something you really want to file a claim for, you obviously can. The next myth is that home insurance covers everything on the property. The truth is that a lot of things are subject to supplements or separate coverages. An example would be trees. A lot of people think that they have coverage for their trees, but a lot of times the coverage only applies if the tree falls over and lands on a covered structure. So bear that in mind. Let's say your fence, your detached garage, or your shed. Those are all going to be part of your other structures coverage. So if you don't have other structures listed on your deck page, go into the dwelling section and see, because sometimes you get 10% of the dwelling that's afforded for other structures. But definitely check that out, because that is a separate coverage that you would need to have. And then also, if you've got jewelry or cash or business personal property, like if you're a photographer and you've got all of your cameras at your house and then they are damaged and a loss, then those items are all subject to sublimits. So if you've got a stash of cash somewhere and then your house catches on fire or it gets flooded and all of that's damaged, you might only get $500 for that cash, even if you had thousands. So definitely have a look at those sublimits and just make sure that you're squared away and you've got all the coverage you need for those specific things, and get with your agent if you need to add more. Myth number 8 is that insurance companies always try to deny claims. And I hear this all the time. I will tell you, in all my years, the carriers that we adjust for, I've met with a lot of them, and they're always saying, look for coverage. We want you to see if there is a covered damage, if there's a covered loss, we want to know, and we want to make sure that we're paying any covered claims. So claims can be denied for a multitude of factors. One of them can be if there's an exclusion on your policy. If you've got a roof exclusion and you're filing a claim for your roof, then it's going to be denied because you've got that exclusion in place. Another reason is lack of documentation. So if you have a water loss and you get the mitigation company out and they tear everything out right away and didn't take any photos, and then the adjuster comes out to inspect and everything's already ripped out, then the carrier didn't have the opportunity to inspect through their adjuster, and they have to be able to see the damages. So make sure that if you have someone come out for whatever reason, it can't wait until the adjuster comes out, then make sure everyone is documenting everything. Lots of photos, lots of documentation, saves the materials that they're ripping out so that they can be inspected as well. So lack of documentation can be a reason. And then another reason could be wear and tear or maintenance issues. Insurance is not a maintenance policy. If you want something like that, you need to look towards a home warranty. Those can offer coverage for that sort of a thing. But with home insurance policies, they're not maintenance policies. They're there to protect against unexpected financial loss. And wear and tear and maintenance issues are expected because it's just the byproduct of ownership and use. So that's why it's not really part of that, because it's expected and anticipated, whereas the purpose of insurance is to protect you against unexpected. And then also, of course, claims can be denied for policy. If you reach a policy limit or a supplement, or if you don't have the right coverage. Like, for example, you have a water loss, and when they're trying to do the repairs, they realize that something is out of code. And in order to bring everything back up to code, they have to do extra things. Well, those extra things would be part of your code, your ICC or your code upgrade coverage. And if you don't have that in your policy, that extra cost to bring everything up to code won't be included. So that could be a reason that your claim could be partially denied in the event that you don't have that additional coverage. And then lastly, with that, there are legitimate disputes though. Like, I'm not trying to say, oh, all denials they're all exactly the way that they should be. There are legitimate disputes. So if you feel like you received a denial and your claim should have been covered, if you haven't already, you should have already submitted all the documentation you have to support it. But in the event that you have more that you need to submit, make sure to submit that to the adjuster and let them know that you're appealing the denial, you're requesting reconsideration, and send that documentation over. Make sure the carrier has everything that they need to review to make sure that they can have an accurate picture of whether there's coverage or not. So just a little tip there. And then lastly, I do hear this one a lot. People will say, well, I pay my premiums. And a lot of times people think that premiums sort of go into a separate account that's for them only. And that's what's used to either pay out claims, or that's what they can use to pay their deductible. And that's not the case. The premium is what the policyholder pays in exchange for the carrier to issue the policy. And that's basically because it's an imbalance of risk. So the carrier is writing the policy and the policyholder doesn't have really any say what goes in the actual policy. But you can see there's also an imbalance of the money at play. So you might be paying $2,000 a year in premiums, but if you have a fire, your carrier could be paying $350,000 in a total loss just for the dwelling alone. So you can see that there is that imbalance. And so insurance can be very complex, but the premiums are in exchange for the policy, and they don't go into a separate place where that's what you use for your deductible. Your deductible is the out-of-pocket expense for each claim, and the premium that you're paying isn't going into a bank to pay your claims. So just kind of keep that in mind. Its premiums are totally separate. They have nothing to do with claims, and they don't get reimbursed to you for your deductible as well. That's a common myth as well. So I would actually like to know which myth surprised you the most, if any of them. And really, I just wanted to kind of finish on saying that insurance is about understanding the policy that you have and understanding it before a claim happens. So I definitely encourage you to read that policy before a claim so that whenever you do have to file a claim, what coverage you have, what's afforded to you, and you can be prepared in that sense. So if you found this video useful, definitely like and subscribe. And every week I will be posting a video that answers a common question or addresses a specific topic. So if there's anything that you want to see, any questions that you have, burning questions about insurance, then let me know in the comments, and I will definitely do my best to make sure all of those get answered. And then we'll be doing some live streams every other weekend or something to kind of answer a lot of these questions that we see in the comments as well. So thank you very much, and I hope that this gives you some insight on how to get the most out of your insurance policy, and I'll catch you on the next one. Thanks.